Good morning. Good morning. Sanbonani. Dumelang. Goeiemorgen. Di macheroni. Afshen baka ino. Mikona kwala. Bale Limpopo bakona. Aye. Welcome to the Tshwane University of Technology. Welcome to the Institute for the Future of Work as we build up to the annual Future of Work Dialogue. The Institute of the Future of Work brings you the Thought Leadership Seminar. There's a series of these seminars, and today the focus is on AI and technology in the financial sector. My name is Papama Chisikawe, and I'm honored to be directing the program today. I'm not alone. I'm going to be joined by Tebogo Magubane over there. Hi, sir. Yes. So we'll be directing the program together throughout the day, and we're quite honored. Thank you so much, Mr. Tseliso Mutlomi and Dr. Gregory, for allowing us to run the program. We're very excited about that. Are we all good? Settled? Should we start with the program? And those that are still getting tea, please get your cup of tea and settle down so that we start with the program. I would like now to invite Mr. Tseliso Mutlomi, the Senior Director in the Institute for the Future of Work, to do the welcoming and opening address. A round of applause for him, please. That's a bit soft, right? This is the man that spearheads the Institute. A round of applause for Mr. Tseliso Mutlomi.
Thank you so much. I really appreciate that round of applause. I'm actually even feeling awake. As the program director have said, my name is Tseliso Mutlomi, and it's an honor this morning to be standing here to welcome you. This is our third installment of the Thought Leadership Sessions that we are hosting this year. And I am also very happy to see that there is a full house and there is a large complement of the students. As I was greeting some of the speakers and the guests, one of the speakers asked me this question, who are you? What are you guys all about? The Institute for Future of Work is an initiative by the Tshwane University of Technology. And one interesting fact, yesterday I was having a chat with someone and I mentioned to them that the TUT is the largest contact university in the country. Do not confuse us with UNISA. UNISA is a long distance learning. When we speak about contact university, we have about 60,000 students who are registered in TUT and attending classes on a daily basis. And we also have a national footprint with campuses in Mpumalanga, Limpopo, Gauteng, and also a contact center down in KwaZulu-Natal. The university, in coming with the concept, so one of the individuals who was part of the council that approved and ratified the inception of IFOW, Dr. Chilwani, would understand and would also affirm the fact that one of the burdens that TUT had in regard to the number of the students and the number of graduates we have was the issue around graduate unemployment or graduate employability. And the university, having that burden, understood that it emanates from a chasm that has opened over the years between academia and the industry. And therefore, in order to close that chasm, the university came with the institute and said, be the one that will stand in that gap, close that gap between academia and the industry to make sure you understand the technological trends in the industry, to understand the impact it has on the current jobs, the impact that it will have on the future of work. And in gathering that intel, we are then able to advise the university from the curriculum perspective to make sure that TUT graduates are future ready. Now, what we mean by future ready, we mean graduates that upon graduation, the industry, even before graduation, would already be fighting over them, wanting them, because they would be well prepared. And for us to prepare them, we also have to understand the industry. And for us to understand the industry, we have to work together with the industry. And the rationale behind the thought leadership sessions is to make sure that we keep on engaging the industry, to make sure that we keep on engaging the government, to make sure that we keep on engaging with the civil society in order to make a meaningful contribution to the academic sector and in order to make sure that our graduates are future ready. The second characteristic of a future ready graduate is that our graduates need to have a choice. They should not think that going into the job market is the only option they have. Should they choose to become entrepreneurs, as the university, we want to make sure that we have prepared them. We want to make sure that we have paved the way. We also want to make sure that we have inculcated in them that mentality of entrepreneurship. And therefore, this environment is also about that networking essence. It's also about exposing our students, exposing our staff members into what the industry is doing. Then our second mandate is around innovation. As the university, we do not want to innovate in a vacuum or to innovate in isolation. Through the Institute for the Future of Work, the university is saying, seek partnership with the industry to make sure that the solutions that are developed by the university, from the university, are in line with what the industry wants, and also are the solutions that are going to solve the societal problems. So the Institute for Future of Work, future-ready graduates, collaborative innovation with the industry, and the third one is the high-impact research, and the fourth one is around the thought leadership. Now, what about today? Today, as we will be grappling with the discussion around AI and technology in the financial sector, we want to put emphasis that technology is affecting and impacting all the sectors in society. And within the industry, AI and technology sometimes is seen as a threat. And so I would want to assure people that AI is not a threat. AI is a friend. And to put things in perspective, the World Economic Forum white paper of 2025, they said that financial service spent about 35 billion on AI and technology, with a projected investment expected to reach 97 billion in 2027. The reason having such a high investment is to try and improve efficiency and also to maximize profit. However, the report also acknowledges that for as much as AI and technology is good for the sector, it also pointed that there might also be some challenges. Challenges of security, but there's also challenge when it comes to the workforce. So the dialogue today, the engagement today, wishes to understand and explore these types of technologies in the sector, understand what are the challenges, and also try and glean on the opportunities. And as we engage in that discourse, I want us to be free. Students ask questions, and we also have members of our academia, the faculty members, ask questions, contribute, so that we have a meaningful report. And I want to also take this moment to thank the speakers for coming through. We have quite a good lineup, if I were to say so myself. And so we are looking forward to hear them giving us the nuggets of wisdom. But also this morning we are honored to be in our midst by the High Commissioner of Gabon in our midst. So the knowledge we generate, we also export. Thank you so much.
Thank you so much, Mr. Tseliso Mohlomi. Indeed, we've got a great lineup of speakers, and that goes the same with the next speaker that I'm going to introduce right now, who's going to speak on AI and tech in the financial sector, focusing on ethics and a regulatory framework. Ladies and gentlemen, it is a pleasure to invite to the podium Lyle Horsley, the divisional head for South African Reserve Bank. A big round of applause for him, please. For her, please. Lyle, over to you.
Good morning, everyone, and thank you so much for that kind introduction. I'll start with a disclaimer to say that the views that I share today are my own and not necessarily those of the South African Reserve Bank. Let me also start by extending my gratitude to the organizers of this event for the opportunity to share thoughts with you at the seminar on AI and technology in the financial sector. I think the theme for the seminar is quite timely, as many central banks and financial sector regulators across the world are thinking about how to harness the benefits of AI and other technological innovations while also mitigating the risks. From a financial sector perspective, advances in digitalization and financial technology continue to have a material impact on the landscape of the financial system. Since 2018, the digitalization of finance has accelerated across several fronts, while investments in fintech companies amounted to $865 billion between 2019 and 2023, more than twice the amount invested between 2013 and 2018. This era of fintech has been described as Fintech 4.0, characterized by big data, advanced data analytics, and advancements in computational power, which has collectively accelerated the adoption of AI-powered applications. At the forefront of this transformation in AI lies generative AI, a subset of AI that allows machines not just to perform tasks, but create, innovate, and imagine. In the prologue to the book, The Coming Wave, the author asks AI the following question: what does the coming wave of technology mean for humanity? The AI responds as follows: in human history, there are moments that stand out as turning points, where the fate of humanity hangs in the balance. The discovery of fire, the invention of the wheel, the harnessing of electricity, all of these were moments that transformed human civilization, altering the course of forever. And now we stand at the brink of another such moment, as we face the rise of the coming wave of technology that includes advanced AI and biotechnology. Never before have we witnessed technologies with such transformative potential, promising to reshape our world in ways that are both awe-inspiring and daunting. That's the response from the AI. That's not my personal view. But just, I think, two things to highlight from that response that the machine provides to that question. The first is, I think it highlights the advancement in AI models that are able to compose text with extraordinary levels of detail and coherence. And the second is the important role of human oversight to critically evaluate AI-generated content and to interrogate the potential bias in asking an AI whether AI is the future of technological innovation. While traditional AI models have predominantly been used for pattern identification, classification, and prediction, Gen AI is able to generate original content that is often indistinguishable from human-generated content. Today, we have Gen AI models with the ability to learn, reason, and solve complex problems. Things that seemed futuristic or science fiction a few years ago are now our reality, from autonomous vehicles to virtual assistants that support customer complaint processes. The financial industry has already started adopting Gen AI. A 2023 report by the OECD highlights the following products and activities in the financial sector that use or experiment with AI. These include banking products and payments, credit underwriting, financial advice through robo-advisory services, insurance underwriting and claims processing, and trading through algorithmic trading and high-frequency trading applications. We know that financial institutions are currently using AI for a range of tasks, including customer relations, process automation, fraud detection and prevention, data and text analysis, risk management and compliance, AML CFT applications, portfolio management, and cybersecurity enhancements. There is growing use and adoption of AI in the South African financial sector, with use cases including fraud detection, claims management, affordability assessments, optimization of customer support, cybersecurity, and enhanced regulatory compliance and reporting. AI presents several risks that could exacerbate existing vulnerabilities in the financial system. The financial sector's growing reliance on AI makes it particularly susceptible to cyber threats posed by AI. AI has the potential to exacerbate market procyclicality and volatility, as the increasing use of AI in trading strategies and investment decisions could create a risk of homogeneous recommendations and herd behavior. AI can increase the risk of market manipulation through dissemination of deep fakes, leading to massive market movements and severe volatility. The widespread adoption of AI may also result in heightened third-party market concentration, making the financial sector overly dependent on a few key players. The responsible development and use of AI can lead to positive outcomes for consumers and financial stability. However, the growing role of AI in financial services raises important ethical questions and concerns that must be addressed. Let me touch on a few of these. The first relates to ethical development and use of AI, and developing AI models that do not harm human rights or do not operate in an unfair or an untransparent manner. The use of low-quality data may reflect historical biases or discrimination based on race, gender, or other socioeconomic status factors. In training AI models, we need to be mindful of potential discriminatory practices. A lack of understanding of AI models' decision-making processes by financial institutions can hinder their ability to explain outcomes accurately and transparently to consumers. As AI learns by assimilating vast amounts of data, the growing reliance on data within financial institutions is expected to lead to increased collection and utilization of data, which may include sensitive and personal information. To address these ethical concerns, we think that there are some principles which can form a baseline for how we think about mitigating some of these concerns. The first principle relates to fairness and non-discrimination, and ensuring that AI models do not perpetuate or amplify biases. The second principle relates to transparency and explainability, and having AI models that are explainable, allowing customers and regulators to understand the reasoning behind AI-driven decisions. The third principle relates to accountability and establishing clear governance and oversight frameworks to ensure lines of accountability and responsibility for AI-driven outcomes. The fourth principle speaks to privacy and data protection and ensuring that AI systems protect customer personal data and comply with privacy laws, such as the one we have in South Africa, the Protection of Personal Information Act. The fifth principle speaks to consumer protection and prioritizing the protection of consumer rights and interests to ensure that AI-driven financial services and products are fair and transparent. The sixth principle relates to continuous monitoring and adjustment and ensuring regular monitoring of AI models to ensure that they comply with existing ethical standards and adjusting them where necessary. The seventh principle relates to ethical training and education and the ongoing training and education for financial professionals on ethical AI practices and regulatory requirements. The last principle that I'll touch on relates to whistleblower protection and having and enforcing strong protections for whistleblowers who report unethical activities related to AI models. These are a few principles that we think could form the basis for developing a sound framework to address some of the ethical concerns. Although AI presents significant opportunities for the financial sector, the growing use of AI introduces novel risks and amplifies existing risks. Some of these risks may be addressed through existing regulatory frameworks. However, existing frameworks may need to be amended or new frameworks may need to be developed to address some of the nuances, complexities, and novel risks introduced by AI. In parallel, supervisory tools and skills may need to be enhanced to more effectively respond to changing business models and market innovations. Regulation plays an important role in addressing information asymmetries and putting in place measures for recourse in the event of loss or harm. So while technological innovation may initially sit outside of regulatory reach, having clear rules and oversight of fintech activities can bring more clarity and certainty to the ecosystem and foster an enabling environment for investment and growth. The use and adoption of AI technologies also requires substantial investment in infrastructure, data management capabilities, upskilling and reskilling, and onboarding of new specialized skills. Building and maintaining the necessary expertise in AI, data science, programming, and related fields is critical. Organizational culture and change management are also important considerations. Embracing AI requires a shift in mindset, a willingness to experiment and develop new skills and workflows across an institution. Fostering a culture of continuous learning and adaptation is critical. In addition, ongoing collaboration and knowledge sharing, including through initiatives such as today's seminar, will certainly stand us in good stead to navigate the fast evolving landscape of AI and technology in finance. Thank you.
She deserves a big round of applause. Thank you so much, Lyle, for that insightful presentation. Now we move on to our next speaker, Ms. Busi Dlamini. She is the Chief Operations Officer, Financial Sector Transformation from the Financial Sector Transformation Council, and she's going to be speaking on AI and tech in the financial sector, transformation. No wonder. Oh, okay. Just pardon us. Oh, okay. Pardon me a bit. Our next speaker is Nwanda. She's going to speak on AI and tech in the financial sector, transformation in the financial sector. A big round of applause to Nwanda. Are you ready? Okay. Please assist with the presentation, AV team. Thanks.
Good morning. My name is Nwanda Mahori. I'm the Interim Chief Executive Officer for the Financial Sector Transformation Council, known as the FSTC. So I'm going to be taking cue from the Program Director, and as I introduce myself, I'm going to be saying, Sanbonan, Dumelang, Lekai. Unfortunately, I'm not as multilingual, so I don't know as many languages, so I can't continue as she did. So basically, I'm going to start off by introducing who we are as the FSTC, as you can see on the slides. And after I'm done introducing us, I am then going to speak about the progress in terms of transformation. And then I'm going to speak about the role of AI and technology in the financial sector. Apologies. Apologies for that. Okay, next slide, please. Okay. So basically, the Financial Sector Transformation Council is a transformational body. We are established in terms of the BBBE Act 46 of 2013 to enforce transformation in the financial sector. Next slide, please. So the mandate of the financial sector transformation has got to do with driving and enforcing transformation in the financial services sector. So we drive and enforce transformation according to the Financial Sector Code. So I'm just also going to give an overview of the financial sector. So basically, this financial sector that we are enforcing transformation and driving transformation is the biggest sector according to Stats South Africa. So in Q1 of 2025, the financial services sector contributed 24% of GDP. And as you can see from the diagram, it is the biggest contributor in terms of sectoral contribution to GDP. And then I'm going to go on and speak about the regulated entities in the financial sector. So this sector, being the biggest sector out of all the sectors, is regulated, and the regulated entities by the FSCA, which is the Financial Sector Conduct Authority, are shown here. So this diagram gives an indication of how vast the financial services sector is, because you can see with the FSPs, which are the financial services providers, there are 11,740 just FSPs. If you go to retirement funds, there are 4,841. So this shows you the vast sector that we request to then report on transformation in the financial services sector. So now I'm going to be linking the financial services sector and our part in terms of digital innovation. But before I do that, I'd just like to give a background in terms of how are we in terms of progress in the financial services sector? Okay, so this slide over here on generic entities highlights on element performance. The next slide, please. Yes, highlights on element performance. So this one shows generic entities. So generic entities are entities with an annual turnover exceeding 50 million per annum and are required to comply with the full scorecard of the Financial Sector Code. So this shows in terms of BEE performance, level 1 being the best and level 8 being the worst, and the non-compliant ones are also shown. So you can see that in the financial services sector, level 1 entities are close to 31% and non-compliant entities are close to 30%. And then we have the in-between levels. Highlights on element performance. So I just want to give it a highlight on the performance according to the Financial Sector Code. How are we doing in terms of transformation? So the first highlight I'm going to give is on average ownership. The ownership element's objective is to increase the number of Black people who own enterprises in the financial services sector. As we can see here, when we look at Black people's economic interests, Black people's voting rights, Black females' voting rights, we can see the targets there, 25, 25, and 10% respectively, but we then see that we are below target. But we are not far off from the target, from the actual target. With the 25% for Black people's economic interests, we have achieved 19.11%, which is not bad. With the Black females' voting rights, you can see the target is 10%, and we are at 8.45, which is also not bad. So there has been progress, even though progress has been slow. The next element I'm going to be looking at is average management control, how we are performing in terms of transformation in the financial sector in terms of that element. So the management control element aims to facilitate participation of Black people in the higher structures of an organization. So as you can see here, Black executive directors, the target is 50%, but our achievement is 29.1%. Black senior managers, the target is 60%, our achievement is 40.17%. Black senior managers, our target is, the 60%, sorry. Black junior managers, our target is 88%, and what we have achieved is 57.64%. Skills development is the next one that I'm going to be speaking about, the progress in terms of transformation. So the aim of the skills development element is to facilitate training and development of Black people, including the empowerment of learners and interns to bridge the managerial gap and to allow the representation of Black people across all structures of an organization. So here, when we look at the average skills development, you can see that the skills spent on Black senior executive and executive managers, the target is 2%. We are at 1.22%. Skills spent on Black middle managers, you see that we are also below target, but skills spent on junior managers, you can see we are above target. And what we have been noticing is that generally, the spending on higher management levels has been less, but with the junior management levels, we have seen that generally we have been performing above target, but we also then have to extend it to the middle and senior managers. The next element I'm going to be speaking about is the average preferential procurement element in terms of its progress, in terms of transformation. So the average preferential procurement element is also linked in our code to the enterprise and supplier development. So the preferential procurement and enterprise and supplier development aims to foster transformation towards an inclusive economy by increasing the economic participation of Black-owned suppliers, Black women-owned and Black designated groups across all value chains in the financial sector. So we can see here, in terms of the targets and what we have achieved, we are below target, but we have been increasing generally over time. So with the average enterprise and supplier development, the contributions, we are also, we are doing well with those in terms of what we have achieved versus the target. So in all the visuals, the targets are red. So you can see that with the targets, the blue is far higher than the red target. So it does show that we are doing well in this particular element. So the next one is the socio-economic development and consumer education. So generally, SED, which is socio-economic development, is key to the upliftment of historically disadvantaged groups. The consumer education element promotes financial inclusion of SMMEs and consumers to equip them with the necessary skills and knowledge to enable them to make informed financial decisions. So as to how we are performing with those, you can see on the graphs that we are performing better than the targets. You can see the target is 0.6%, and we're at 8.88%. And also with consumer education, you can see the target is 0.4%, and we're at 1.83%. So we're generally performing good on these elements. Empowerment financing. So basically, in terms of how we are performing on average empowerment financing, what we have seen is that we are generally performing well in terms of empowerment financing, even though there is room for improvement. So empowerment financing targets investments in SMME development, in agricultural development, in affordable housing, in transformational infrastructure. So the transformational infrastructure, you're focusing on roads, you're focusing on water and sanitation, you're focusing on how does the financial sector work with government and work with municipalities in terms of providing basic services. And empowerment financing also focuses on BBBE transactions and also funding of Black companies through the Black Business Growth Funding. The next one is access to financial services, how we've performed with regards to this. Access to financial services promotes financial inclusion and the expansion of reach of affordable financial products and services to cater for the historically disadvantaged groups. So with the access to financial services, you can see that with the banks have been performing fairly well. And then the next slide, please, or number 5, it's correct. Okay, so with slide number 5, with the number 5, you can see that with the life officers and the short-term insurers, that the performance hasn't been as, the penetration in terms of access to financial services hasn't been as high as that of the banks, but you can see that with life officers there has been progress, but with short-term insurers, we still need more work to be done. So the next slide, please. So progress has been noted, despite it being slow. So over the years, we have had progress, but the progress in terms of transformation in the financial sector has not been adequate. So the main challenges remain, which is the underrepresentation of Black professionals, in particular women, in executive and technical roles. Rural and township-based financial enterprises often lack adequate financial and other forms of support, limited support for Black-owned fintech companies, fragmented skills development efforts, inadequate geographic penetration of transformation benefits. So now I'm going to be linking the transformation and AI and digitalization. Technology disruption So AI and digitalization are technology disruptors. AI, blockchain, robotic process automation, and big data, these are often both disruptors and opportunities can be also taken up from these. And these must be integrated with inclusive frameworks to foster transformation and equitable development. So digital disruption enablers through AI, data science, cybersecurity, digital services, and expanding this fosters job creation, entrepreneurship, access to education, and gender parity. Digital technologies are catalysts for inclusion. So they are catalysts for inclusion, and they drive expansion of financial inclusion and access for the unbanked and the underserved communities. Digital technologies are also catalysts for skills development. And I just want to indicate something about skills development. So part of the things that we've seen in transformation in terms of how we've been performing, the reason why transformation and elements often, the progress is often slow, is also linked to skills development. Skills development creates a pipeline for progression in terms of organizations. Skills development creates a pipeline for entrepreneurs to be able to start their own businesses. Skills development creates a pipeline for entrepreneurs to be able to know how to access finance. So we've seen that the performance of skills development is actually ripples, creates a ripple effect across transformation in the financial services sector. So the improvement of skills development will enable us to transform at a greater pace. So financing Black innovation and fintech. So part of our elements include ESD, which is the enterprise and supply development. When I was giving the average performance, I did indicate how we're performing in those elements, and they also include the preferential procurement. So these elements can be used to redirect, establish, and implement policies such that we are able to then finance Black innovation and fintechs. This slide on promoting decentralized economic participation speaks to the extension of digital infrastructure across peri-urban and rural zones and facilitating township-based entrepreneurs through fintechs and scaling fintechs. So what we've also taken note of in terms of AI and digitalization is that there are risks to technological integration. And what are those risks? So the risks include labor market disruptions due to automation. The risks include exacerbating digital inequality if we don't have sufficient inclusive infrastructure. And the risks include algorithm bias in credit, insurance, and recruitment models. So ethical foresight and policy coordination is required to manage these risks. So here they still speak about the ethical responsibility and the risks involved. So I'd just like to say here that the risk must not take us back in building a fair and inclusive, sustainable financial services sector that is transformed and advances the participation of the historically disadvantaged. In as much as we have risks and we have ethical considerations to take into place, these must not take us back in the progress that we've made. And as we move forward with the integration and moving forward with transformation and embracing technology, we must move forward with our people. Recommendations: South Africa's financial services sector must align digital transformation with inclusive growth, and key imperatives include: design transformation-conscious digital strategies, invest in scalable, inclusive digital skills development, foster equitable innovation ecosystems, embed transformation into the ethics of technological design. In conclusion, I'd like to end off with a quote from the former CEO of Unilever and author. So his name is Paul Polman, and he says, I quote, "Businesses cannot succeed in societies that fail. So as we transition more and more to digital technologies and AI, we must not leave our people behind. As we forge forward, we must combat the triple challenges that South Africa is plagued with of poverty, inequality, and unemployment. We must build a South Africa that is characterized by inclusion and economic participation, and is a representation of the demographics of the country." I thank you.
Another round of applause for Nwanda Mahori, please. She's the Chief Operations Officer at the Financial Sector Transformation Council. Thank you so much for that insightful presentation. And our next speaker, he's very familiar to the university, Dr. Thabang Chilwane, the Head of Financial Inclusion and Public Policy at BASA. BASA is the Banking Association of South Africa. It is an association representing 33% of the 37 bodies in SA. They advocate for banking industry and regulators and government. Mr. Chilwane, Dr. Chilwane, will be speaking on the banking sector, the role of AI and technology, and the future of work. A big round of applause for him, please.
Thank you very much, Program Director. I don't have a village voice, so I must come close to the microphone so you can hear me. Am I audible? Okay, great. Well, just a small correction. It's actually 33 banks, not percent. We have 37 banks in the country, and 33 of those are our members. I must be careful what I say because we've got our regulator in the room, and we also have the Financial Sector Transformation Council also in the room. So I'm going to walk the straight and narrow. Good morning, everyone. I'm not going to do the South African thing, although I can speak almost 9 of them, but the time is of the essence. So let me get straight into the matter. It is indeed such a pleasure today to be here. Though I must admit, I did a ChatGPT search and asked for help to write this speech. And it was a bit scary because it did such a good job. And I was wondering whether it actually also wants my job at BASA. But that's exactly the question we are talking about today. What is the role of AI, artificial intelligence, and technology in banking? And more importantly, what does that mean for the people who keep the sector running? So let's begin with the obvious. AI is no longer science fiction. Certainly not in banking. It's not something confined to the Silicon Valley or to tech unicorns. It is here. It's in your banking app. It's that chatbot that talks to you. In fraud detection algorithms, in loan approvals, and increasingly in the boardroom strategy sessions. It is here. So banks in South Africa and across the continent are leveraging AI We are not shy about that. To process mountains of data that is presented to the banks in milliseconds and assess creditworthiness more accurately and detect suspicious transactions faster than you can say phishing scam. And at this rate, if a criminal sneezes near a keyboard, the system will know. But what does this mean for work? People like you and me. What does it mean for us? Well, let me reassure you. While AI might be taking over some tasks, it's not taking over our purpose. Yes, repetitive rule-based jobs are being automated, but new roles that emerge are emerging fast. We are seeing the rise of AI ethics officers. You heard from the Reserve Bank issues of ethics there. Fintech product designers, blockchain specialists, and digital inclusion strategists. So you see, AI doesn't reduce the human touch. It redefines and refines where we apply that human touch. We are moving from spreadsheets to strategy, from reconciling numbers to reconciling visions. The future of banking is about more human-centered roles like relationship management, behavioral economists, and inclusive finance policy experts. So let me offer a real example. One of our member banks recently integrated AI into their customer service. So thousands of queries were instantly resolved. But guess what? The bank also retained their agents as digital financial coaches to help clients understand people who do not have a bank account. The underbanked are those who may have a bank account but don't know how to use it properly. So it's like having a car but not knowing how to drive it. So AI is helping us to reach these people in ways that we couldn't do before. So we are doing that now through mobile wallets, biometric IDs, and that. So last year I was playing with it when it first came. When it first came in. There was this AI thing that you create images and pictures with it. I typed in, like any hot-blooded male, a beautiful girl came. So I said, okay, let me see. I said, strong black man. And AI said, illicit material not allowed. So AI has blind spots. And AI, when left unchecked, can deepen inequality. That's why, as BASA, we advocate for strong ethical frameworks, regulatory foresight, and collaboration with academic institutions like this one, so that we can shape a responsible AI future. And this brings me to education and the future of work. We urgently need to rethink our curricula. I'm happy with the Institute for the Future of Work, and I'm more even proud because indeed I was the deputy chair of the council, so I feel like I'm back home. The universities like TUT and the industry bodies like ours must co-create learning pathways that marry finance, technology, and ethics. We must make room for digital apprenticeships, policy internships, and hackathons for social impact. The job of the future will demand a hybrid skill set. The future that I mean, that future is already knocking. It's not too far. So in closing, let me say this. AI won't replace bankers. But bankers who use AI will replace those that don't. The future of work in banking is not about fearing machines. It's about teaching them to work for us so we can work better for society. So let's build a financial system that's not just smart, but also fair.
Thank you so much, Dr. Chilwane. It's always a pleasure to listen to you speak, particularly on the role of AI and technology and the future of work. Thank you so much. A round of applause to him once again. Ladies and gentlemen, I would like to now, before we move, just correct myself. Nogwanda Mahori was here earlier on. She's not the Chief Operations Officer. She's the interim CEO. And as a woman myself, I feel that I need to correct that. And, apologies, Nogwanda, she is the interim CEO. Please, a round of applause to her, please. Thank you. And now, Dr. Chilwane, you spoke about rethinking the current curricula in higher education. And as we club industry and academia, it's very important that we also introduce the next speaker who's going to be taking us through a session on AI in the financial sector, realigning the curriculum to respond to the needs of the sector. Ladies and gentlemen, help me welcome Dr. Varaizo Denere. He is the senior lecturer at the University of Johannesburg. Doctor?